G'day folks, Jim here from FX Charts, Tuesday the 5th of March. Thanks for tuning in. Well, it was all about Russia and the Ukraine today. There was some data out. The EU PMIs came out, the manufacturing PMIs. They were a little bit mixed, but the market took absolutely no notice at all. Nor really from the US data. The dollar was probably underpinned somewhat by the stronger than expected ISM. And the consumer spending, but really it was really about the political situation in Russia. So the dollar and the yen were really the beneficiaries there. And we're going to have a look at the charts. And the euro having gapped down, it closed on its highs on the weekend at about 138, opened lower. Eventually just about filled the gap, I guess, but it's the euro has continued to decline. It currently sits right on the 100, 200 day, 100, 200 hour moving averages, which have converged at about 137.30. The hourly indicators look negative, and the 4 hourlies are pretty much the same. They've turned lower, and I guess if we see an escalation in what's going on in Russia, if military action takes place, then the euro is going to come under some pretty severe pressure. In the meantime, though, it's just mucking about. If we do head lower, the first minor FIBO support is just under 137, and then we've got this sort of low down here, the pivot to around 136.50. Last week's low 136.43, and if we break below that, then we're heading back towards the 136 and lower down towards the 135.60. Really, it all depends on the outcome of what Russia does, and nobody's really got any idea there, so we're all going to be sitting waiting for headlines. Having said that, if nothing eventuates, if calm breaks out, which looks a little bit less likely, common sense doesn't seem to be a major priority, but we've got the ECB meeting later in the week, and also the non-farm payrolls, of course, on Friday. Now, as we've said before, as we headed into the weekend, we've got this major downtrend resistance here. A break of 138.30 would see a run up to 138.90, which was the previous high. And if we take that out, then we could be heading a fair bit higher. At the moment, though, it's just chopping around. One thing that we should notice is the dollar index, which broke important support on a weekly basis to around 79.95 on Friday. Closed at 76.75, but it's back above 80 this morning at 80.08. So if that was a false break, as I say, it was weekly support, so we won't know until the end of the week. But if that was a false break, then we could see a return of dollar strength, but that remains to be seen. Looking forward to the yen, well, that was the major beneficiary of a safe haven trade today. Dollar yen got down to a low of 101.20. Now it's since recovered there. The dollar's really reasonably resilient here. It's at 101.5. It hasn't recovered an awful lot, but it's had a choppy day really. Now if we do break this 101.20, then we're probably headed back down to this low down here around 100.75. But there's pretty good bids in between. And the hourly charts actually are showing mild positive momentum, so we could actually break to the top side. It all depends on the headlines once again. The 4 hour charts, they're getting a little bit over, so they actually look as though they might try and be turning a little bit higher, but that remains to be seen. And I'd be a little bit wary. So as soon as the first gunshot's fired in the Crimea, then the yen's going to make further ground to the top side, and the dollar will come under pressure. Particularly euro yen will come under pressure. That's below 140 again now. It's currently trading on session lows around 139.15. So keep an eye on that. But yes, while the tension remains, the yen is going to be a beneficiary. Cable, well, that really was doing absolutely nothing today until it looked as though tensions could increase in the Crimea, and immediately nosedived. But since when it's just sat around here, it looks as though it could be forming a bearish flag for another run to the downside. But at the moment, it's doing not an awful lot. The next support, if we do head low, is down around this 166.05, which we've spoken about before. We seem to have broken the rising trend support, so that looks the path of least resistance. And below there we go to 165.30, and then we're heading a fair bit lower, but I don't expect to see that yet. On the top side, well, we've got the 100 and 200 hour moving averages. They're sitting around 166.80, 166.90 area. So above 167 would see a quick run up towards this sort of minor resistance at 167.40, and beyond there we're heading back towards 168. I don't expect to see that today though. The 4 hourly charts are suggesting that we've got some downside momentum ahead of us, and the dailies are fairly non-committal, so I think it's probably going to be fairly choppy and directionless, but I think selling rallies is probably the way to go. Dollar Swiss has recovered. It's at its session highs actually at the moment, having recovered from 87.70. It's at session highs. The 4 hour indicators do look to be turning a little bit higher, and for the time being, I think we need to just as long as we stay above 87.70, use the channel marked in red lines as a guide, but I'm not really sure that we're going to head too much higher. We've got the up here where we've got, this is the first resistance around 89.30. Until then, it's going to be fairly choppy, I think, within that range and below. The 88.50 is obviously where the original support was. If we go back to the hourly charts, just so 88.50, that was the original support. That now becomes resistance. We've got minor levels here. That's 88.58, 88.70, and as I say, beyond there, back above there, we've got sort of 89.20 is a point to watch. So I don't think we're really going there yet, but the hourlies are looking a little bit positive, as are the 4 hourlies. And as I say, in the bigger picture, watch the daily channel. The Aussie, well, that opened lower and at 88.90 or so, and it's since spent the Monday range regaining lost ground, so we filled in the gap. We've got the RBA today. I don't think there's an awful lot going to happen there. There's a good chance that Glenn Stevens will continue his mantra from February, but he might be increasingly dovish given the poor capex number last week and the ongoing soft data coming out of China. So that could push the Aussie back down to the day's lows, and if we were to break there, we could head on down towards this sort of 88.70 and then 88 sort of 30.20 level, where the sort of FIBO support is. I don't really see that. The hourly indicators are mildly positive, and the 4 hourlies also look to be turning mildly higher. But in the bigger picture, I don't think we're going much above 88.80 today, and that seems some way off. We haven't been above 89.80. We haven't been above 89.45 today, and we've got this sort of the 100-hour moving average at 89.55, and the 200 up about 89.75. So they could well act as resistance. So all up a fairly choppy session, but watch out for what Glenn Stevens has to say. The Kiwi, that's not doing an awful lot either. It did open lower, it gapped a bit lower, down to 83.40, but it's sitting above the 100-hour moving average at the moment, and we've got the RBNZ meeting next week. So all up, I think probably an 83 figure. This is at 83.20 down here, so maybe above the 200-day moving average, but in the bigger picture, between 83 and 84.25 ahead of the RBNZ meeting next week. Looks probably about to have it pretty much covered, I think. So that's about it for today. There's not really an awful lot to add. It all depends on what's coming out of China, out of Russia, I should say. The only data really, we've got the EU PPI, I should say, and then we've got ahead of that we've got the RBA meeting today. So there's not an awful lot else out. There's very little out of the States, so it's all going to be headline watching. A pretty choppy session, and I think keep fairly flexible and keep stop losses very tight. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers. Bye.